When silver makes a move, the moves are enormous. Where in this market is there room for Russia or any country to start buying silver? The supply is not available. In the absolute end game, you could see gold at $10 an ounce offered on Comex and no bids, and $100,000 bid in the cash markets, but no offers. That we would get to a point where no one would release gold, no one would release silver for any fiat price, because, fiat being viewed as nothing.
In today's news recap, Citi sees higher U.S. copper, silver, gold prices after Trump tariffs. Citi analysts expect prices of copper, silver, and gold in the U.S. to spike after the Trump administration imposed tariffs on Canada and Mexico. The Trump administration announced a 25% import tariff on Canada and Mexico, 10% on energy imports from Canada, and a 10% levy on China to take effect from 4 February. The brokerage said the U.S. has a significant import reliance on Canada and Mexico for copper, silver, and gold, with the two countries representing 3,300 tons of annual U.S. unwrought silver imports, 147,000 tons for copper, and 54 tons for gold. The U.S. is also a significant importer of semi-refined gold and silver concentrate from the two countries. The analyst said redirection of trade flows could soften the impact of recent tariffs somewhat, but the effective cost of these U.S. metal imports will still be higher net versus London pricing, combined with a heightened risk of physical shortages to meet U.S. exchange contract delivery. They expect further expected tariff escalation will be bearish for global growth, industrial metals, and oil, but bullish for gold. In addition, willingness to tariff Canada and Mexico as U.S. free trade agreement partners reduces the likelihood of FTA country exemptions from potential broader U.S. tariffs that could be implemented later. Combined, we think this will see U.S. pricing versus non-U.S. for metals widen further, the analyst said in a note. Before we show you more clips, smash the subscribe button and check out our huge discount on NordVPN, the fastest and most reliable VPN on the market. This VPN service is a perfect fit for smart stackers who want their privacy protected and don't want their data compromised by prying eyes. For less than the price of a cup of coffee, secure your internet access and get 3 free months with our promo. Believe me, the only problem you'll ever have is that you didn't get it 6 months ago. Let's get back into the episode.
So I think that's what changed the game, because typically when you see higher rates or a stronger dollar, you see weaker gold. That's been the past. You're not seeing that now, and I think the reason being is the world saw what the U.S. did with Russian reserves and is thinking to themselves, well, hey, wait a minute. If they can do it to Russia, they can certainly do it to us. So let's sell our treasuries that we hold as reserves and buy gold and hold the gold in hand, in a vault in their country. And let me just comment, I think the reason a lot of mainstream not mainstream media, but mainstream financial people miss this whole thing is because they're Keynesians. They're not Austrian economists. Austrians, to simplify it, it's common sense. Austrians are like the perfect common sense, and Keynesians, it's like it's like the thought process is made up, if you will. And the thought process with the Keynesians is that the best asset on the planet is U.S. government debt. And when I say the best asset, that means gold is not there. Gold is, a lesser asset. When in fact, that's not the case, because the treasuries, the currency of treasuries can and is being diluted. The danger of not being paid back, an outright default, is rising, although I don't think that'll happen because they can always print. But there is that danger. And on top of that, then there's the danger that the U.S. Treasury will decide, oh, well, we don't like what you're doing. Your money is now ours, like what they did with Russia. So I think the Keynesian thought process is flawed from the respect of they don't understand what's the true foundation to the financial world. It's gold. It's not treasury bonds. Although for the time being, it is treasury bonds. But there's going to be a comeuppance that the likes that the world collectively has never seen before. How I think they will, what you're saying, revalue gold. There's been talk of using the gold, the supposed 8,300 tons that the U.S. has, using that as either collateral or selling it to buy Bitcoin and creating a Bitcoin reserve. And Bitcoin's going to be, $20 million in 10 years, and that'll bail out, it'll cover the entire Treasury debt spectrum. That's how if they actually do go through with that, which is lunacy. First off, I don't think the gold's even there, but even if it was, it's complete lunacy because you're taking the ultimate real asset and putting it into the, ultimate unicorn asset, whatever you want to call it. But that would require the Federal Reserve to revalue the gold, wouldn't it?
In today's news recap, JPMorgan plans $4 billion gold delivery amid tariff fears. JPMorgan Chase Co will deliver gold bullion valued at more than $4 billion against futures contracts in New York in February, at a time when surging prices and the threat of import tariffs are fueling a worldwide dash to ship metal to the U.S. The bank, which is by far the world's biggest bullion dealer, was one of several institutions to declare plans on Thursday to deliver bullion against contracts traded on CME Group's Comex that will expire in February. The delivery notices, which total 3 million troy ounces of gold, were the second largest ever in bourse data going back to 1994. Traders on Friday declared their intent to deliver another 1.1 million troy ounces on Tuesday, according to the latest notice from CME Group. Fears of imminent tariffs on imports following the election of U.S. President Donald Trump have caused prices for gold futures on Comex to surge over spot prices in London. Spot prices shot to record highs last week, but the additional premium on Comex has created a lucrative arbitrage opportunity for the handful of banks that can quickly fly bullion between key trading hubs. Similar pricing dynamics have emerged in other Comex contracts too, and the disparity has become so large that traders have started flying silver into the country. The precious metal is usually too cheap and bulky to justify the cost of air freight, and one industry veteran says it's the first time they've seen it happen. While millions of ounces of gold trade on Comex every day, typically only a small fraction of that goes to physical delivery, with most long positions being rolled over or closed out before they expire. It is unclear whether JPMorgan or the other banks were delivering bullion physically to take advantage of an arbitrage opportunity, or were simply using the deliveries to exit existing short positions. JPMorgan and exchange owner CME Group Inc. declined to comment. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
U.S. Treasuries are backed by the full faith and credit of a government and of a treasury and central bank that is technically insolvent, as opposed to gold. Gold nor silver, neither can default, neither can bankrupt. And if you have it secured where it can't be taken or stolen or whatever, if you have it in hand, there is no counterparty risk whatsoever. I mean, gold has value because it is. Treasuries have value because the U.S. military tells you they have value. I would just go back to 1929, 1930. What happened then? Tariffs were raised all over the world. What happened? Trade collapsed. And that's what's going to happen here. If he does go through with these tariffs, and when I first heard it right off the bat, I'm like, that's not really a great idea, because that is going to harm trade. And trade is what creates, if you want to call it velocity worldwide, it creates, money moves, it creates liquidity. You put some sand in those gears, and you're going to have a hard time getting the machine going again. Everything in the world, and I'm not talking about physical assets, I'm talking about financial assets. Everything in the world has the possibility of bankrupting. Gold and silver cannot bankrupt, thus making them the perfect foundation to be the last two financial men standing, when this thing comes down. And like I said, creating tariffs, you got to be really careful, because then you could create a tariff war / trade war.
Yeah.
And trade slows down. China is super leveraged. We're super leveraged, and all you have to do is knock one of the wheels off the track, and the rest are going to follow. And I think that's tariffs, the way they're being explained to the American people, that they're a good thing and you won't have to pay as much in taxes because foreigners are going to be paying the taxes. Well, what tariffs are going to do is, when you slap a tariff on something, you're going to get less supply of it, because some suppliers are not going to send it. So now you've got less supply, which that on its own raises the price. But if you add 10% or 25% or 50%, whatever, to the widget that you're making, that money is going to ultimately be passed along to the consumer. So something that cost $10 yesterday, and then they put the tariffs on, it might be $13, $14. So you're feeding the inflation monster, and you feed, I guess most importantly, you feed inflation expectations. And what that leads to is people basically just trying to spend their currency before it goes further down in value.
What do you think about Bill Holter's insights on the BRICS nations, the silver squeeze, and the potential explosion in gold and silver prices? Are we really on the verge of a massive shift in the global financial system? Let us know your thoughts and predictions in the comments below. Do you see silver and gold skyrocketing soon, or do you think the squeeze might ease up? Let's discuss it. Now, check this video right here because it's a perfect fit for you, and I'll see you on the other side.